Alright, so you just started trading Forex and you're ready to start making some serious money, but the only problem is you have less than $100 to your name or to put into your Forex account. Well, in this video, we're going to talk about how you can start trading Forex with as little as $100, and I'm going to give you a strategy, an exact strategy towards the end of the video, but you're going to want to watch the whole video because I'm going to give you the exact logistics on how you can actually trade with less than $100. So if that sounds good to you, all I ask is you hit that like button and subscribe to keep up to date with all the Forex and stock market content that I post every other day. And let's get started. So I'm going to be honest, trading with $100 is not the easiest thing, and for that reason, when you're trading with a really small account like under $100, you're going to want to kind of treat it more like a gamble, because that's honestly what it is. If you're trying to turn $100 into $1,000, you know, if you're trying to take that small account, like a $100 account, and turn it into something like a $1,000 to $10,000 account, it's really difficult to do, and that's just the plain old truth. But it doesn't mean it's impossible. So if you just want to try out Forex and you have $100 to throw at it, and you want to see how far you can take it or how large you can grow your account, because once you get to that $1,000 to $10,000 range, then you can start trading a little bit more consistently without having to be on that sort of gambling side of things. So in this video, we're going to discuss pretty much just that, the best way to take high risk but high reward style of trades. And this is so that you can grow that $100 account as fast as possible so that you no longer have that small account and you can start trading in the big leagues. So first thing first is you're going to need a Forex broker that actually accepts an account with less than $100. And you guys know that I'm usually against these brokers that offer over 500 to 1 leverage or even over 50 to 1 leverage because they are unregulated, but because you guys have asked for it so many times and most of you guys don't, you can't really trade with the bigger brokers. I had to do my research and find a reputable and simple brokerage that actually offers high leverage and small accounts. So the broker that I was able to find is Osprey FX. The link will be in the description down below. I like them because their deposits are really simple to do. You can literally put in your credit card or debit card information and make a deposit that way. It's like basically you're buying, buying clothes, right? You just put in your card information and boom, it goes right into your account. So the deposits are really easy to use. The platform is just really easy to use. It's easy to connect to MT4, MetaTrader 4. And so as you can see here, we have leverage 500 to 1. So this will let you actually trade with $100, because if you have low leverage, it's pretty hard to trade just $100. Minimum lot of 0.01. You have a $10 minimum deposit, so that helps us out with our $100 account. You can trade cryptocurrency pairs, you can trade 55 currencies, and you can trade even stocks. So if you are going to trade with $100, just know that this is the broker that I would personally recommend. It's actually the broker that I will be using to do a small trading account challenge in the future. So I highly recommend them. They're easy to use, simple, and the link will be in the description below. So now let's actually get into the strategy of things. So what you're going to want to do is, first off, you're going to start on the daily chart. Okay, so the higher time frames. And this is because it's easier to trade on higher time frames with a small account because you can take smaller position size and make larger profits, okay? So you're basically targeting a higher amount of pips with a smaller position sizing. So this makes it easier for smaller accounts to trade. So we're going to start on a daily chart. As you can see, this says 24 hours. That's the same thing as a daily chart. It's just for the replay sake, it doesn't let me go on a daily. I have to use a 24-hour chart. Either way, what you're going to want to do on the daily chart is go through your Forex pairs, whatever Forex pairs you want to trade, and you're just going to look for very clear buy and sell areas, otherwise known as support and resistance. So in this example that you see in front of you, you're going to see that we have this very clear buying zone right in here. Okay, so why is it a buying zone? Because it has spiked up and out of that area in the past, right? So you can clearly see we spiked up out of there pretty sharply, which lets us know that there was strong buying in that area. So you're going to want to wait until price is back in that area. Okay, so now we are testing this buy zone right in here, right? We are now retesting, sort of making that double bottom. And we're going to wait, okay? We're going to go on a lower time frame now. We're going to drop down to the 4-hour chart. And we're now going to wait until a higher high is made. So we're in a buy zone. We're currently in a buy zone on the daily chart, right? All right, and this buy zone extends all the way out. It's also broken resistance, turn support, and then you can see buying happened right in here, buying happened right in here, buying happened right in there. So this is a strong level. So always look for strong levels on the daily chart. Okay, now what you're going to want to do after you've identified a strong level of either support or resistance, this is going to be support, so we're going to be looking to buy in this zone. What we're going to do is drop down to a 4-hour time frame. And all we're going to do is wait for a higher high to be made. Why do we wait for a higher high to be made? Because once we get a higher high, we then expect a higher low and then a continuation up. So it only makes sense to wait until we have a higher high and buy on this pullback if we are going to buy this pair, which is the US dollar CAD. Okay, this also increases our chances of winning, which we are going to need if we are trading $100. So let's just speed this up, and the high that we're going to look to break is this one right here, right? This is going to be the most recent high, so we're going to look to break that high. So, all right, sorry about that. I just accidentally skipped all the way to the front by clicking this button, but we're going to hit play. We're just going to play this forward and wait for this high to be broken. Okay, we are still within this little zone here. And now, as you can see, we push through and have broken this high. So once we've broken this high, we now have that higher high we've been looking for, and we're going to look for that higher low. Okay, and again, we just go out to that 24-hour chart, the daily chart, and you can see what that looks like. Okay, we're now starting to reverse in this buy zone. So we know that we're getting reversal out of the buy zone. We're going to want to buy, but we only buy when we get a higher high. So now we have a higher high. Now we're going to look for that higher low. We're going to try to get in on a pullback, and the best way to get in on a pullback is by using a Fibonacci retracement. Okay, so we have this Fibonacci retracement right here. We go from that low to the high, and we're going to wait for the price to come back and retest this zone, the buy zone, right? The daily buy zone for a buying opportunity. And we're also going to use the Fibonacci retracements as our confluence. Okay, so this is just another level of confluence. So that 382 and 50% retracement level is going to be where we're going to look to buy this, because it lines up with our buy zone. So let's just get rid of this and see what happens. Okay, so we never actually reached that until, there we go. Okay, so we're just going to do it. Let me show you how this works. We're just going to put the Fibonacci retracement from low to high again, right? Okay, let me actually just pull this back just 1 second so you can see what this looks like. All right, so this is the trade setup, all right? We just made a new high. We're still looking for that higher low, and we're still looking for that retracement back into the buy zone. Okay, so again, we're going to take our Fibonacci retracement from low to high, and that 50% retracement to 61.8. This is the zone we're now looking at to buy, because it lines up with that buy zone. Okay, so it's just simple confluence. Okay, so what you're going to want to do is take your buy entry right in that zone, and then you're going to want to put your stop loss just below the buy zone or below this low, depending on your risk tolerance. Okay, and what you're going to want to do is aim for a risk to reward of 2 to 1. Okay, so let's put this down here, and our target is going to be at least a 2 to 1. Okay, it doesn't matter if the target is, we're not looking for a target on the chart basis. We're just looking for that 2 to 1 risk to reward. This is because it just lines up with the probabilities of things. We're not targeting highs, we're not targeting lows. All we're doing is putting our stop loss first. Okay, we know our stop loss is in a safe spot below this buy zone, and then our target, we just automatically put it to twice our stop loss. So the reason you want to have a 2 to 1 risk to reward is because if you have an $100 account and you have a risk to reward of 2 to 1, okay, and you have a win rate of 55% with a risk to reward of 2 to 1, it means that you can afford to lose or only win about 55% of the time, but still make a profit. So as you can see here, we have a $100 account, or a 100 euro account, and we have a win rate of 55%, so we're only right about half the time. We have a risk to reward or win-loss relation of 2 to 1, and then we take 50 trades, and we risk 10% of our account per trade. So that is a really high number, and that's what makes this, similar to gambling. It's because if you are risking 10% of your account and you lose 10 trades in a row, boom, you've lost your $100. So again, this is very difficult, and you may lose that $100, trade at your own risk, right? But if you were to try to turn that $100 into $1,000, this is the single best way that you can do it. So now let's go back to our example trade here and see how this works out. We have a risk reward of 2 to 1, so we're risking 50 pips to make 100 pips, and we're just going to hit that play button, and there you go. Okay, and this is just what you're going to do for the next 50 trades, hoping that you have a win rate of at least 55%. So you're going to look to win about 50% of your trades or half of your trades using this strategy, which is plausible. But the only hard part about this strategy is that you do have to risk about 10% of your account per trade, which is a high amount of risk. Again, if you don't want to risk that much of your account, then you need a bigger account. So if you just want to throw in $100 and see how far you can take it, see if you can grow that $100 into a big account, which we're going to actually do on this channel here, then this is the perfect way to do it. It's a high probability way of doing it. You're trading with the larger time frame, you're trading with the trend, etc., etc. So if you enjoyed this video, all I ask is that you hit the like button and subscribe, turn on the bell notification icon, and join our free Discord. Link is in the description down below. Again, if you want to use Osprey FX, the link is also in the description down below for you. I wish you luck on your journey of $100 to $1,000, $10,000, whatever you want to take it to, and I'll see you in the next one.